Hello, everybody. This is Brandon. Today is August 25th, 2024. It is Sunday, and I'm bringing you this at approximately 3:52 p.m. as I make this. And I'm going to do a little bit differently. I will also talk about the SPY technical analysis and where we are. But today we're going to be comparing at major Fed pivots, and I know you've seen some of those chart that I put out, and I wanted to dig deeper into what that actually means, correlating with each of the dates of the Fed pivot. So this will be more educational in nature to help us prepare for what is coming, as the market will they or will they not celebrate this long-awaited rate cuts that's coming, and we'll talk more about that as we go. All right, so what we're going to do is we're going to talk about the disclaimer and pause it, read it. If you agree, please move forward. Here's my shameless plug on X.com, Galaxydoc Market on X.com, and please join us there. All right, so really quickly, this is the I'm sure you've seen this chart graphics that was circulating around on the X.com or elsewhere. It's from ElliottWave.com, and I put a big red X out right here because, well, when this thing was made, they were looking for, just like everybody else, what are we going to see? And when is the Fed going to pivot? And Fed took a long time to pivot, right? Even though there was rumors circulating about it. So we are talking about August 2024 pivot from a speech. I don't know how much we need to read into that, but it was pretty clear. Powell is ready to pivot, and he said that he's ready to make adjustments. And you have to take into consideration that all of these dates that are here have a couple things in common, which we're going to be talking about. But a lot of them have not come at the time of record high inflation. This is what we're talking about, the record high inflation. Lots of jobs that are beginning to be lost, even though the Fed and the alphabet agencies are saying that the job market is moderating, but it's still strong. That's not true. We have record layoffs from just about any and all manufacturers and companies out there. And then, of course, there's record big box retailer bankruptcies. The Conn's Furniture is one of them recently, and store closures. Of course, then we have, you guys can search for this on your own, but World Economic Forum is warning of shock events coming between today and November elections. And, you might want to pay attention to these guys. I think they do run the world. And then, of course, it's not done yet, guys, but this Japan yen crisis, remember this one? I mean, how short our memory is that the panic, that was the warning shot. You need to pay attention to this while the markets seem to be euphoric. And we got to also look at where we are on the SPY or QQQ or, and see where we are in terms of what is the market actually telling us and what is the history telling us. And then, of course, everybody seems to forget there is extreme amounts of support for banks through printed money, and making sure that there is an illusion that the banks are solvent. Okay, and we do have bank solvency issues. We have this backdrop as the Fed is talking about pivoting at this point. Okay. You are pivoting at record high inflation, which they are ignoring, and they tend to ignore everything else in between. And if you don't believe me, go to X.com and type in hashtag milk inflation, type in consumer demand destruction. I've been talking about those things at extensive rate. Regardless, okay, without beating a dead horse here, I do want to talk about, I don't really care about these 1981 type of things that occurred here. We are going to focus on 2000, 2007, and obviously 2019 Fed pivot that led into the pandemic. Okay, I don't know if I'm allowed to say that, but and the other thing that you need to look at is that those pivots came at the heels of rising federal funds effective rate. Guys, so much money has been printed. In a nutshell, if you don't want to watch this video, I'll try to make it as short as possible. But if you take nothing away from here, is that the Fed pivot always comes at the height of federal funds effective rates. And those have been, and oddly enough, somewhere between 6.25 to 5.75%. Okay, that is the effective fund rate at which pivots occur. Okay, and we'll dive into this a little bit deeper as we move forward. All right, so as we move in, Fed is always late to the game. Guys, Fed is responsible for blowing bubbles and creating economic conditions, which basically scares the bejesus out of everybody. All right. I don't think that they're leading the policy. I think either one or two things are true. Number one, either they're doing this on purpose for transfer of wealth. You guys can Google that. I'm not going to talk about it extensively, and I will not talk about political issues. All right. Or number two is that they're so quote unquote data dependent. They don't know their head from their butts. But this is par for the game. Right, and they are announcing a potential Fed pivot on the September 18th FOMC meeting. And the question now is going to be, is it going to be 25 basis points, 50 basis points? Some are even talking about a full 100 basis point cut. We'll see. Okay, so we're going to analyze the major Fed pivot from 2000, 2007, 2019. Obviously, 2000 was .com. Yes, I was trading during that period. And then the financial crisis and 2019 pandemic. And what I want to show you is the commonality and the basic market behavior that leads into the recession. And obviously, then, Fed never takes the blame for that, right? But it is exactly these cutting cycles at the wrong times and easing cycles at the wrong times that creates these problems. And I'm going to show you why the market is not going to go up forever, and that any of these little rips that we have, you need to understand within the historical context. So what I mean by that is, let's go into 2001. Okay. Basically, the dot-com crash or the 911 event that occurred. But we're going to be talking about 1999 to 2000 time period. And these orange arrows are denoting areas at which the Fed started to cut rates. Okay. And here's the other thing that I want to show you is that this area at the bottom is these are all the rate hiking cycles that led up into this crisis that basically formed. What's common here is that there is a period of inflationary problems in which the Fed starts to cut rates because of the quote-unquote, at this point it was Greenspan. Alan Greenspan was the federal chairman. He famously quoted the irrational exuberance because the stock market and asset prices and everything was overheating, including inflation. They started to aggressively cut into that quote-unquote boom. But what you want to understand is not when they're cutting. Raising rates. I mean, they're raising rates through this period right here, right? They've been raising rates. What you got to understand is this is the period at which the markets go into this great period at which the stock market starts to go higher. It's when everybody starts talking about, oh my gosh, it's affecting our growth and all the interest rates are too high, blah, blah, blah. You just fill in the blanks. You got to start worrying when they start to cut rates, because shortly after is going to follow a economic dislocation, which they will blame on something, whether it's last time it was a pandemic, last time it was a financial crisis, dot-com bubbles, etc. We have a lot of geopolitical and economic dislocations in our system right now. Any one of them could be blamed on things. We have a bunch of different types of health warnings from the World Health Organization. There's wars all over the place. There are people out of jobs, and there seems to be also a lot of division among the country between for this election. And those are the things that you need to keep in mind. Now, I don't have a crystal ball on knowing what's going to cause all this, but I do know that I can present you this historical analysis to show you what's going to happen. So basically what we did was January 3rd, coinciding with this arrow right here, Fed started to cut rates. And yes, we've popped and then dropped and then went on a little bit of a rally for about like 2 or 3 months. Okay, so this arrow is denoting the tops of the market. And when you look at this, you can absolutely see from here on, any type of rate cuts were followed by a short stint of a bounce. But ultimately, over the next 3 to 4 months, we had a steep sell-off. And then from here are all the economic problems that started showing up. And so the Fed starts to cut in response during the dot-com bubble to a major catastrophes that was going on in the markets. In this case, the bubble blew all the way into 911. They were cutting, trying to stimulate the markets. Okay, so what I'm saying is that for a couple of days after the actual rate cut, or the markets will maybe celebrate that, and then it'll drop, and then it probably will go on after this first bit of the cuts here, is that it's going to run higher. Now, the rumors of the market rate cuts and everything has been circulating for a while. So this time, I think it may be different. You might want to see if, because it was highly anticipated that the Fed would cut, we finally got that notice, there may be a acceleration of the sell-off in the next few days or a week or so coming into this. Okay, now let's look at the next one. This is for the housing bubble, the Great Financial Crisis, and the Great Recession. We're not allowed to use depression word anymore, so it's the Great Recession. And so what's happened is that leading up into this, after the dot-com bubble burst and all the accommodative measures that came in, Fed went on a massive hiking spree, right? They were basically hiking rates all the way up, and notice the market direction until the announcement of the rate cuts. Okay, so these are all rate cuts that are happening. And so as they were hiking, everybody was bitching and moaning as if basically every time they hiked, we would get these little blips down, right? And these are all that you're seeing as they hiked rates, raised rates. But the market in general went up. It was climbing that wall of worry. It's when Fed started to announce rate cuts was that historically there's something brewing underneath that forces the Fed to get a little bit worried and to start cutting rates. And they'll use whatever excuse that they will, but the cutting of the rates is indicating a significant market dislocation, because you know what happened in the Great Financial Crisis, right? So these are basically trying to cut the rates to help out the banks that were basically dealing with a lot of these delinquent mortgages, New Century, Countrywide, Lehman Brothers, the whole 9 yards. All of these people, that this was in response to that, cutting rates and opening up discount windows. I lived through it. All these rate, it would start to decline, and then emergency rate cuts would happen. Okay. And then after that, the reality set in. After all, the banks started going belly up. Bear Stearns started closing. Lehman Brothers went under. They started to realize, oh crap, we're in the recession, but we can't use a depression. And they basically went on a unprecedented rate cut and bank takeover campaign. And again, I'm not going to go into great detail. For those of you that lived through it, you can always learn about it. It's not historically completely accurate, but a good one would be The Big Short. Watch what happened there. And these right now are Fed's attempt, as we entered into 2008, further cuts. What did that lead to? A bottoming process from where we are into the 70s range all the way to 50. That's over a 30% correction into a crash. Okay, one final crash and then the flush. Okay, so what I'm saying is that rate cuts precede some catastrophic events that will come in every time that they do this. And while the markets may celebrate this situation, the people like us, we're looking at this and we're going, okay, so the rate cut is coming on the heels recently of the Japan crisis, and that is the pre-earthquake, folks. Okay, that's warning you something else is going on. We know the banks are insolvent. We have a whole slew of other things that it could be, but the Fed is now comfortable cutting rates. Here's a kicker, though. For the first time, Fed is cutting rates into already a widely recognized hyperinflationary event, and it's just only going to get worse. So there goes that whole part about, is the Fed doing this on purpose or are they clueless? I think they're doing this on purpose, my opinion. All right, let's go into so the recovery. So these green arrows represent right here. These green arrows now represent rate basically hikes because we were coming out of the great financial crisis, right? And heading into 2015 and on. Here's one right here. Here are all the dates. You can pause it and look at how much they've basically been raising rates and where the funds went up to. Okay. And then they overdid it right here. And, the market was just saying, hey, this is right before the COVID, right? And so they basically raised one more time. Markets didn't like it. And then, but that was basically done to basically slow down overheating the economy because of the accommodative policies. But we also know that the Fed started to go on a rate cutting processes because they were concerned about the slowing economy. There was again at this period in time rumors of recession, and people were worried, and so that's happened. But you know what? Why? So they were tightening, and then they started tightening, and they started cutting rates up into here. As the market was moving higher, they cut rates even higher. But what we all know what happened in 2020, the pandemic hit right about here, and we went down significantly. Okay. And we ended up bottoming in, the middle of March, and we went straight up because Fed started cutting rates even further into that, down into 0% rate. Okay. And it's when Fed starts to panic cut is when you get these dislocated motions all the way down. Okay, now, currently what's happening is that we basically had our last rate hike in July 26, 2023, and we've basically been steadily rising ahead of that. Now, there's rumors and hopes of a rate cut has led this further every time the Fed did not cut rates, but notice how choppy the market is getting. Okay, you didn't see this at the 2000 or the 2007 examples that I'm telling you. Jackson Hole, Powell had an accommodative language saying that they're ready to adjust on the heels of high inflation, record job losses. Okay, which they say is moderating at their expected pace. The question I have is what's coming next? Is it the banks? Is it Japan? Is it the geopolitical instability? What is coming? You got to be on guard. Okay. So what's coming up next? So let's look at our some technical analysis real quick. All right. So we got this McClellan Summation Index. I still don't trust it right now. It is fully bullish. Okay. Everything is going higher. Okay, but like I said, since about May of this year, this thing has completely become inverse to what it is, or basically became a divergent indicator. So does that mean as we're entering into this area that the top is coming in, or has this fixed itself and it's portending further rallies? Okay, and you just saw what I said about the market rallies ahead of raising rate campaign, and the announcement of the rate cuts is the start of some dislocative event. Sometimes it takes 2 to 3 weeks, sometimes it takes 3 to 4 months, but it will play out most of it within a span of 1 year. So we're going to have some volatility coming up. But again, I wanted to show you the McClellan Summation Index because it is fully bullish, but it has been divergent, and I think this may be marking the top. Okay. So let's look at SPY real quick because I spent so much time on the historical analysis of the rate cuts and rate hikes and what cycle we are in now that the Fed is ready to basically have accommodative cutting of the rate policies. Okay. So what we got is we had a bearish engulfing and then we went right back into the gap. This gap is super important. Can we pop a little bit above there and start selling off? I think that's the next logical condition. I think our setup right now is a little bit different because the market has already been pricing in a rate cut for a good part of the year now. And then now Powell just signaled at Jackson Hole that they're ready to adjust in the heels of massive inflationary pressure. Unless I'm wrong, I'm not sure. But I think this is all planned process. So we got to watch this gap right at the 562 to 564 level. And that's kind of where we're at. Let's look at the SPY on the weekly, though. Okay, SPY on the weekly, we have divergences galore. On the RSI is negatively divergent as we're trying to get up to the all-time highs. The question is, are we going to hit the all-time high, make a double top, or make a lower high and start moving back down? Okay, that all depends. Now the MACD is ready to make a bullish cross, so take that as it may on the weekly. Okay, the CCI is negatively divergent. Stochastic is showing us, basically showing a previously bullish move over ahead of this Powell announcement. But the PPO ADX is bearish right now. So I think it's going to take some time and patience. But, these things can come like a thief in the night. Our conditions are a little bit more different because the inflationary pressures are profound. Okay, it is much higher than what our alphabet agencies or the bankers or the talking heads on TV will tell you. Okay, so let's look into our fear and greed index. Despite all of that, we're not at extreme greed. We're at neutral. We came off of that fearful level. The market isn't really completely sold on this yet either. So, like I said, markets probably trying to already have priced in 5 Fed rate cuts. This is from last week's slide. And so what happens after the Fed pivoted in history? Now, the question I have is the market going to consider what Powell said at Jackson Hole? They're ready to adjust. I don't know, whatever that means, as a pivot. If it's a pivot, it's a little bit different. Again, we're in a different macroeconomic picture. We're not in a highly overheated market, right? We have a market that has GDP that's underperforming. Retailers are dead. The housing is a bubble. Everything is a bubble. And on top of that, inflation is running rampant for food and everyday people. And people are losing jobs. So they're going to cut into this, fueling further inflationary problems unless there's some banking issues that are going to happen. I talked about this before, the relief rally dead cat bounce that was coming off of the JPY right here, right? This JPY and US dollar relationship is very, very important because as soon as Japan came out and said, we're not going to be hiking rates into this economic environment, and so the market followed suit. And it started to fall even further, and the market rallied even further. So what does this look like? I think these are inversely related, and I think everyone needs to pay attention to this. Well, we got a big fat stiffy last week, and could this be marking the top, especially if this candle breaks above this 100-day moving average and starts moving higher, which I think is going to further signal problems in the yen carry trade market and BOJ itself. By the way, BOJ is damned if they do and damned if they don't. Whether they cut or hike, they're screwed. Okay? Now, don't forget about my consumer demand destruction. They are proposing to cut rates ahead of this. And they're cutting rates because they know recession is here. They're not saying it's a recession now. By the time Fed says recession, that's the times where markets are just going to go into full panic mode, and you're going to see Fed cut. Who knows what they're going to do at this point? Okay. So here's the keys to next week. In summary, we got the Powell language change that everyone's looking for. Everyone's super happy about the adjustment, which is signaling a policy shift, right? Signaling a pivot. All right. So that's going to come on September 18th, rate cut. But question is it 25? I think if we get a 25 basis cut, I think the market's going to sell off hard. If we get a 50, I think it'll still sell off. But I think we will maybe 3 or 4 days later start to sell off. There is something underlying the economy or geopolitical issue, whether it's another one of those pandemics that are coming. All right. Market knows. Okay. We're watching closely the JPY-USD relationship, okay? It's beginning to move higher again. Gold is breaking out, so gold is telling you something. And if you've been ignoring gold, I think gold is going to go above 3,000 shortly here, okay? Historically, rate cuts are followed by panic and signal that deep-rooted systemic economic issue will present itself shortly. So what will be the explanation then? We don't have time to worry about that. We need to be prepared, okay? Bounces will be sharp. Patience is key, okay? Like I said a few weeks ago when I said the bounce was coming, that it's going to seem like the whole sell-off is over and that the new bull market is starting, okay? That's completely different from what I've just presented to you. When Fed goes into preemptively cutting rate cycle, they're going to eventually start panic cutting ahead of economic dislocation. All they've given themselves was a little cushion because that's all they can do and jawbone. And so will we fail near all-time highs in the SPY at the gap? That's the major question for this week. Do we fail? Okay, how is it going to fail? I don't know. We'll see. I don't think the bottom's in yet. The big rally is to come after we take out this 49.68 to 48.85 on the ES or 486 to 464 on SPY. Maybe it goes lower. But I do believe ahead of the election, there's going to be a lot of volatility. Okay, WEF is talking about some crazy stuff, but whatever they say isn't crazy. You got to pay attention to them. History rhymes. Okay, if you need to go back and rewatch my video on those analysis that I've given you, you have to basically do just that. All right. So anyways, follow us on the Galaxydoc Market. Like us, share us, and above all, comment. I really appreciate all of you subscribing. All right. I think I've been talking a lot more politics. Guys, I'm not, this channel is not designed to be political. I just think a lot of the issues that are coming up can be political. But I'm just trying to present to you my best analysis from what I see. Please subscribe. And if you want to work with me, email me at coachbrandon@protonmail.com and let's figure out a way to work with each other. Otherwise, be careful out there. It's going to get really, really wild. And so the market finally got to pivot. Let's see what it does with it heading into the September 18th. All right. Bye-bye.